And in our top business story, Dubai plans to accelerate the implementation of its 2030 industrial strategy starting next year as it intensifies efforts to boost the contribution of the sector to the economy and continue diversifying its income. The Emirate unveiled in June its targets to add 160 billion dirhams to its GDP and to create 27,000 specialized jobs by developing 6 industrial sectors, including aerospace, maritime, pharmaceuticals, medical equipment, aluminium and fabricated metals, food and beverages, and machinery and equipment. The Crown Prince of Dubai and Chairman of the Dubai Executive Council, His Highness Sheikh Hamdan bin Mohammed bin Rashid Al Maktoum, yesterday gave directives to accelerate the implementation of the industrial plan. His Highness Sheikh Hamdan stated that strengthening creativity and innovation in various industrial areas is one of the key elements of the Dubai industrial strategy, which is in line with the Emirates' quest to consolidate the foundations of a sustainable, dynamic economy based on research, knowledge and development. Abdullah Al-Shaybani, the Secretary General of the Executive Council, said that the implementation of the strategy started in September with the formation of 6 specialized work teams for each of the subsectors, which will need to collaborate. Shaybani added that the teams will also launch a number of initiatives to drive the growth of the industrial sector in the next few months. Abu Dhabi stock market plans to introduce covered short selling in the first quarter of 2017, according to its chief executive, as it seeks to boost liquidity and attract more foreign investors. In covered short selling, investors borrow shares and sell them in the expectation of repurchasing them later at a lower price. Regulators in the Gulf have until now shied away from allowing the practice because of concern that it could destabilize markets, though some countries, including Saudi Arabia and Qatar, have said they plan to introduce it. According to reports, the Abu Dhabi Securities Exchange said on Monday that it had held meetings with brokerages in Abu Dhabi and Dubai ahead of the launch of a short-selling service. ADX Chief Executive Abdullah Al-Blushi was quoted as saying that the exchange was acting after the UAE market regulator, the Securities and Commodities Authority, approved rules on short selling. Al-Blushi said that the ADX aimed to diversify investment instruments in order to increase the level of liquidity to match global markets. ADX's short-selling service will be open to investors with margin trading accounts, investment funds, institutional investors, custodian clients and market makers. In a statement, the ADX described several rules to reduce risks surrounding short selling, including that the price of a stock sold short must be higher than the last deal price involving the stock, while brokers' clients will have to provide guarantees when selling short. Abu Dhabi International Airport received 1.86 million passengers in November, an increase of 4.4% against the same time last year. On Monday, operator Abu Dhabi Airports Company said that since the beginning of the year, passenger traffic has grown 5.3% to 22.29 million passengers between January 1 and November 30, from 21.17 million passengers during the same period last year. The airport recorded a 38.6% increase in passenger traffic through Terminal 3 compared to the same month last year, reaching 1.32 million. Traffic to and from Saudi Arabia registered the largest surge in November, rising 43.5%. Total aircraft movements rose 1.7% to 14,272 from 14,028 in the same period last year, while the year-to-date decline was 0.5%. Cargo services growth grew by 1.3% to 71,193 metric tons in November. However, it declined 3.5% to 733,742 million tons in the period between January and November 2016. The Telecommunications Regulatory Authority has issued new regulation for fees for use of frequency spectrum and wireless equipment in the UAE, with the new regulation effective from the 1st of January. The new regulation encompasses fees for radio services used in land, maritime, terrestrial and satellite, including mobile service, broadcasting, satellite and services related to emergencies and disaster relief. The acting Director General of the TRA said that radio communication is considered one of the pillars through which vital services are provided to the institutions as well as the individuals, adding that this depends on the frequency spectrum, which is limited in nature. The new regulation will also, according to the TRA officials, support the provision of new technologies such as the Internet of Things, smart cities, space services and ICT sector projects. It will also support the reuse of frequencies to provide new services and modern technologies in line with the national strategic plans.